is Akmal.
What are tax implications might be received by the company when it's a resident and non-resident in Malaysia for a year relevant assessment? Okay, they were divided into two, which is resident and non-resident. In resident, there were three. The first is required to maintain Section 108, account for purpose of tax deduction of frank dividend under the existing imputation system. Second, are eligible to claim tax incentive as prescribed under the Act and the Promotion of Investment Act 1986. The third one, income will be taxable if it deemed derived from Malaysia. Okay, the second one is for non-resident. There was three. The first one is not required to maintain such account. The second one are not entitled for any tax incentive. The third one will only be taxed on income accruing in or derived from Malaysia, provided if there is a business present. I will gonna explain about how the company be a resident in Malaysia. State the relevant section. Okay, according to the section that have been stated in the taxation Malaysia, how company be a resident in Malaysia under the paragraph section 8 subsection 1 and paragraph B of the ITA 1967, a company or a body of a person not being a Hindu joint family carry on a trade or a business is resident in Malaysia for the basis year for a year assessment. What RIB does in practice to notify the company be a resident in Malaysia? The first one is place where the annual grand meeting are held. Location of the company letterhead, minute of a board of director meeting and decision taken are relevant in determining the management and control of a company.
Assalamualaikum warahmatullahi wabarakatuh. I will explain about type of tax return form used by the company for the submission of income tax. Every individual in Malaysia, including resident or non-resident, who is liable to tax is required to declare his income to Inland Revenue Board of Malaysia or Lembaga Hasil Dalam Negeri Malaysia. Taxpayer is responsible to submit income tax return form and make income tax payment yearly to due date. Depending on individual status and source of income, the taxpayer has to complete and submit proper type of form. Below is the guideline to select which type of form is applicable. Next is, I will describe procedure must be complied by each company for income tax under self-assessment system. Malaysia adopt self-assessment system on a company where it is required to furnish an estimate of income tax payable for year assessment, not later than 30 days before the start of basis period, and the return form to be submitted within 7 months from the closing date of the company's year-end account. Last is types of penalties that can impose if not comply to self-assessment system. First is penalties for omission and non-disclosure. Under the tax audit system, the IRB has also introduced a new penalty regime for non-disclosure and omission of information that affects a taxpayer's tax liability. Next is penalty for not providing reasonable facilities and assistance. Failure by a taxpayer to provide reasonable facilities and assistance to the IRB when conducting an audit is an offence, and upon conviction, the taxpayer may be liable to a fine of between 1,000 to 10,000 ringgit or face imprisonment for a term not exceeding 1 year or both. And lastly, failure to keep sufficient records. The company or persons responsible upon conviction will be liable to a fine of between 200 ringgit to 2,000 ringgit or face imprisonment for a term not exceeding 6 months or both.
Hello, I am FITRI binti HUSAIN.
So I will explain about the chronology of GST and SST that used in Malaysia. Before 1 April 2015, the Malaysia tax had used the SST tax method on goods. And after that, the Malaysia had used the GST tax method good for 3 years, 5 months, which the all goods and service are subject to GST except exempted supplies and zero rate GST, relief of GST. And after that, on 1 September 2018, not too long, the GST tax method on good are abolished after the in-government change, which the SST is single stage tax of 5% or 10% on manufactured goods and 6% on taxable service. Only goods and service tax fall under the SST list are tax 5,455 consumer goods to be exempted from SST. So, let's look how does GST work. GST is the tax that are imposed to all levels, from manufacturer, wholesaler, retailer and consumer need to pay the service tax. It can be said all of item will be imposed tax. So now let's look how does SST work. SST work is the tax that are imposed only to one level, which is manufacture only at the output service. And after that, the government collect the tax once it is the imported good and the certain service that when it is offered to consumer only.
My name is NADIA SOFEA. I will explain about how does the GST and SST will work in an illustrative way so that we as a consumer can have a better understanding about how this will affect us in our real life and how we would react if there is any transition from GST to SST or SST back to the GST. Okay, let's look to the illustration that we have provided here, which is if a purchase cost of a bag plus a margin is FITRI and a wholesaler take a 10% profit margin or a retailer take a 20% profit margin, how this situation will apply to both systems, which is a GST and SST. And here we are provide you with a calculation.
The GST concept is all about how the tax is imposed at every stage and how the input tax credit can be claimed by every stage except of the consumer stage. I will explain one of the stage, which is a retailer stage. In the retailer stage, when a wholesaler sells the product, 6% of GST was collected through a final consumer, which is RM3.90, where it also can be called as output tax. But the retailer only have to pay RM0.667, which is, you can see here, to government, as there is input tax credit that can be claimed by retailer, as there is a tax that they pay when buy from a wholesaler. However, us as a consumer need to bear entire tax of RM3.90 collected by a retailer plus 6% GST that is imposed to us of a consumer stage because of buying the goods. Next, we will look at the SST system. SST system where tax is only be charged at a manufacturer level only and there is no credit mechanism under SST. As you can see that the tax is only imposed at the manufacturer level and collected by the government, which is around RM5. But when it arrives at a wholesaler level, of course the manufacturer will collect the SST through the wholesaler. To be noted, there is no input credit available. That's why the wholesaler will buy the goods from a manufacturer at a price with the SST price. So there is a hidden tax for each level. Up to consumer level, a final consumer have to pay all the hidden tax, which is RM7.20, as there is a cascading effect. Started from a hidden tax of RM1 and then continuously a hidden tax of RM1.20 and the hidden tax of RM5 collected by a manufacturer, so the tax has increased to RM. In the conclusion, of course, with or without the tax, the price will still be increased. And with the implementation of the SST, there will be a non-compliance of a business, which will increase a tax of the cash, and the business will pass a burden to a consumer.